I've been working from home for the last, on and off for the last 6 years.
Okay.
So I wanted to continue. I mean, I saw that it's possible to actually be at home and make money. It's just that working for somebody else just didn't, it doesn't look like something that it is not something I want to do going forward. So doing real estate, I'm doing that. But it takes too long to get paid. And so even though I like it and I enjoy interacting with people, I want to find something that is quicker to get paid and more consistent, that I have a little bit control, if you will. It could take 2, 3, 4 years before I can actually do it full time. And I'm okay with it because that timeline is okay with the plan that we have for our life, my husband and I. So I figure the sooner we start, the better, rather than postponing it. So yeah, I think it's just a way of continuing with the freedom that I have from working from home, but not having to depend on going, working for somebody else.
Oh, that makes sense. So who's the better trader, you or your husband?
Not a I mean, he made, Monday, both of us made money, but he kept his regular account intact and he just started doing simulator. I just figure if they already give me the money and I'm supposed to be working with money, I just want to continue trading with a regular, funded account, but I gave it all back, so yeah.
You gave it all back.
Yeah, and more, as you can see.
Well, let's take a look at this. All right, so the first thing I want to show you is, do you understand the thing that has really helped me in my trading is first and foremost understanding support and resistance. So do you understand what that means?
I feel like I do today better than I did yesterday and Monday.
Do you have, before I even jump down and start teaching you the way that I trade, what's the way that you trade or that you'd like to trade? Are you a type of trader that needs to sit in front of your computer when you have trades on and you're not done trading till you've closed out everything? Or can you get in trades and walk away and check on them throughout the day? What style would you prefer?
I mean, since I'm going back to work, I think I need to learn how to set trades and let them be.
Okay.
I think that would be the best strategy for me right now, to learn how to set them up and then just make sure that, they're going to close on their own.
Okay.
Yeah.
So there's a couple different techniques that you can do. You can, instead of doing scalping.
Okay. That's what I've been doing.
So that's all we kind of do here because it's a lot easier to teach methodology on the 1 minute chart than say a day chart.
Yep.
So, but if you're not going to scalp, then you probably need to do day trading, which is you look at it periodically throughout the day.
Yep.
The disadvantage to day trading is that you can forget that you have trades on. And if you don't manage them, you could end up being backwards. The other disadvantage is that you're not going to be able to hit a lot of pips because you're only going to have 1 or 2 trades on.
So I guess I just have to manage my schedule to do before I leave the house. So actually be in front of the computer would be like the scalping and doing it an hour before I go to.
There's nothing wrong with day trading or position trading, but if you really want to get quick education, the scalp trading is going to give you more opportunities to learn. And that doesn't mean that you're going to be profitable. It means you're going to make more mistakes and be able to learn from those mistakes quicker than if you only have 1 or 2 trades on a day. Does that make sense?
Okay.
And so don't look at, even though in this account, hey, you risked out, you hit your 5%, look at it as this opportunity of growth, right? And your trading will turn around if you look at your mistakes and say, where did I go wrong? And analyze your mistakes, right? Because I would say that taking a bad loss is bad if you don't learn from it.
Yeah.
But if you learn from that mistake, then you should look at more opportunities to learn from your mistakes, right? And so by scalping, you have the opportunity to make more mistakes or faster.
Yep.
Expedite that learning curve.
True.
And I'm not trying to say that scalping is better, but you see Sean, he can pull out 1,000 pips pretty easy. Well, in day trading, you could do that if you catch the right swings.
Yeah. Okay.
Right? So that being said, when we get into this, what would you kind of what path would you like me to walk down? A set it and forget it, or support and resistance and managing your trades?
Well, let's do the managing or the trades of scalping.
Okay.
And because even though I have been doing it, I have been doing it right to begin with.
Okay.
So, I mean, I had issues like knowing. I feel like one of the things that I want to get clear is when to go into the market.
When to jump in.
Yeah, and then also, the supported resistance, like when you're doing it, when to hold back and not buy anything, and then get back into buying again. So I have an idea. I just want to, narrow it down and perfect it.
Sure. Well, I am probably going to switch pairs here just because I don't trust this pair right now because it's doing some crazy things that I'm not used to.
Yeah.
So let's go find the Euro JPY. Okay. Let's look at this pair for a second. Okay, so the first thing that I look at when is determining your bias. Are we going to be buying or selling? And so if you look at this overall wide picture here, and I got to change this pair to Euro JPY. So if you look at this overall picture on the 1 minute chart, which way would you say it's trending?
Down.
Okay, and then on the 5 minute chart, which way would you say it's trending?
Well, down there, but it was picking up.
Okay, so it's still on a downtrend, right? So also you're going to want to jump over, maybe check the 15 minute. Yep, still going down. 30 minute, still going down, and we got a bigger down, right? So I tended to just look at the hour before I even start trading, like do all this and look at the hour, because what you don't want to see is it's going down but the hour is going up or whatever, right?
Yeah.
But when I start trading, I'm usually just looking at the 1 and the 5. So the 1 and the 5 minute tells me where my major support and resistance is. The 1 minute will tell me where my entries and exits are.
Got it.
Okay, so I generally trade off the 1 minute chart, but keep an eye on the 5 minute chart. Okay, so in the last, I'd say, if these are 1 minute candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Last 20 minutes or so, it's kind of been moving up, right? So, but it's up against this little tiny downtrend, and I'm going to draw on this chart, and I would suggest that you do the same thing when you get in. You got a little bit of a channel going on right here. Did you see that?
Yeah, okay.
So if it hits here, it's not likely to go past here. It's more likely to come back down. Does that make sense?
Got it, okay.
The other thing that you want to look at is price and time cycles. Have you heard that this week?
Yeah.
What's price and time cycles? Do you know what that is? If you don't, that's fine. That's what I want to.
Yeah, I don't think I have that concept right.
What's that?
No.
Okay, so just at a quick glance, a little hotkey that I love is I use a mouse, and if I push into that mouse, it creates those crosshairs, but your crosshairs are also right here. So if I click the scrolly wheel, it gives me that. So here is one time cycle.
Okay.
Basically on this pair, you go from a pivot point to a pivot point. So do you see how this is a pivot point? And I usually don't count the wicks, I just go body to body. Okay. So from the last low to the last high, it's about 18, right?
Okay.
So this one, that last low to last high is 20. Okay, so now we have an 18 to 20 range. That last low to that last high is 12, 13. This last low to that last high is a little bit more aggressive, I'd say. Right there, we got 32, and then we got 17, we got 30, we got 29. So really, we're dealing with some movements that are greater, that are between 20 and 30 price cycles. So if you see that, then you would say, okay, well, if it's coming down, it's probably going to come down to between 18 to 20.
Okay.
Right? So if it's going to come down to 20, there's not a whole lot of movement left on this price cycle before it's going to start going up.
I see.
Does that make sense?
Yep. Okay.
So if we're going to get into a trade right here, what do you think is the highest probability of a trade that we could jump into? What would be our bias right now? Would it be to buy or to sell?
To buy.
Why?
Because at one point it's going to pivot down and then it's going to go up.
Yeah, so there's a higher probability that it'll return. Now, if we're only looking for 2 pips, even a greater probability, right?
Yep.
And we could have just got 2 pips if we would have bought right there and it bounced up. Now that it bounced up, what we want to do is we want to wait for it to come down here and then buy. So in this trading account, you can trade with 1.98. So the first thing I would do is I cut that in half. I round up and say you have two lots to trade with. So cut that in half, you have 1 lot really that you want to trade with.
Okay.
You're trading at a 0.02, which is great. Stop loss is at 50. So you're perfectly set up to scalp.
Okay.
Okay? And that's good right here. And this is probably my settings. I don't know if that's yours.
No, I did that this morning
This
with
is your
Todd.
settings.
Yeah.
Okay, perfect. So what we're going to do here is we're just going to go ahead and jump into a few buys because remember, oh, I love that. So the reason why I love that, I love that bounce too. You see that?
Yeah, it's kind of decided where to go up or down. Yeah.
But our spread is ridiculous. It's like 2 pips. I mean, so you want to trade a pair that has a smaller spread. So, so you got to keep that into account, right? So we got to hit our spreads. So if we believe that this price cycle is about to the end of its cycle and it's going to start another one, you know, at from here to here, probably right in this range, then the higher probability is to get into buys, right? All right, so we're into a few buys here. I'd probably stack them on. And here's another trick too. If you get that message and you hit the enter button, you can throw more on like that.
Is it because the server is not picking it up quick enough?
Yeah,
or?
so you can just sit and tap the enter button and
Okay.
it'll get you in more trades, right? So if you want to get in more trades, you want to stack them in. So we're in about 20 trades, but really we're in a position of 0.20. So we're in 10 trades, but really it's just 1 trade.
Got it.
Does that make sense?
It's 1 trade because we're moving up on that trend at the moment?
I broke up 1 trade into multiple trades.
Oh, I see. Okay, yeah. From the 0.98, where we're just going to work on 1.
Right.
Okay, got it, yeah.
So here's something that I probably wouldn't trade right here. And on the 5-minute chart, we do have a little bit of data right there. But I hate when I don't have support and resistance to the left of me, right? There's no data right here. And so it's kind of like the wild, wild west.
Yeah.
It could continue to shoot down once it crossed over this.
Yeah, which
So-
it's doing.
Which it's doing, but that's fine. I'm still going to place a couple buys right here because it's kind of overextended itself on that price, right? Because it's used to trading. Now it can go to 30 and still kind of be in that realm, but I'd also grab all of my buys right here and put I'm going to put my targets there, and then I'm going to do this again. Buy, check all, continue, okay. And I'm probably going to put all of them right there. The reason why is because I don't feel that it's going to break this without going back down again.
I see. And you want
Because-
to cash out before it does that? Okay.
Right. Now I'm going to take a loss on this one and that one, but I'm going to win on these ones.
Okay.
And so that's why I stack my trades.
Okay.
Right? Because if I was up here, right here, with all of my position size, I would have to wait for it to cross that in order for it to make money.
Okay.
And that's why I stack my trades, is because I don't have to wait. So if it crosses this candle right here, If it crosses this candle, my probability of it hitting here is really good.
And the reason you chose that is because you have this support, like that was the lowest high, or why we just...
So you said it correctly. This is a support zone right here.
Okay.
Right? Or excuse me, a resistance zone.
Okay.
So a resistance is ceilings and support is floors.
Okay.
So as we're going up, this is a ceiling, and I put my take profit right... I'm just trying to zoom in a little bit. I put my take profit right below that ceiling. So if you're doing construction, you're in real estate, and you're trying to knock out a ceiling, is it easier? Is it easier to have your take profit before you even punch the ceiling, or if you're trying to get a treasure chest, would it be easier to have the chest before you have to break through the ceiling, or after you break through the ceiling?
You get the chest before I break through
Exactly.
the ceiling. Okay.
So our treasure chest, we want to put it before we have to break through the ceiling.
Got it. Okay.
Does that make sense?
Yep.
And so if you put it even in the ceiling or above the ceiling, it just says market. You have to start pounding on this
Got it.
before you hit my take profit.
Okay.
So we want to make it as easy for the market as possible to give us our profits.
Got it.
Right? So we must have just tanked it. Okay, so yeah, look at that.
So that's where, the decision that you're making right now, like it's already gone past the line that
So
you were
you got
expecting.
one right here. This is our last line of defense. If it goes and breaks through that, then I would say that we need to get into fix it mode, right? So in these trades, I'm going to say these are kind of lost to us right here. So what we'll do here is we'll go buy, check all, continue, and I'll move these down to this because the higher probability now is that we're going to need to lose on these ones, but we can win. And I'm going to probably increase this because we're getting some major, 2 pips is easy for it to hit, right? So we'll get into a few more trades here. And we will... And this is just crazy volatility right now. Check all, continue, which is good. Well, I shouldn't say volatility, it's just crazy movement. And we'll go ahead and put those right there. Do you see, now I'm kissing these trades goodbye. This is fine.
So there goes my non-losing trades for the day.
No, because we're gonna make
So as long
these-
as I end up making money.
Yeah.
Okay, got it.
Does that make sense?
Okay.
So that's what you have to do when you're wobbling is you got to
Okay.
be unattached to these trades.
Yeah.
You know what? The market went down further. I mean, we anticipated a 20 to 30. We're at a 50.
Yeah.
So it's what we call an overextended market because we just extended that price cycle.
Okay.
You know what I mean? So I'm still biased on the buys, even more so that we now have that the market has overextended itself. Are you understanding what I'm saying?
Yeah.
Okay.
I mean, but yeah, I understand what you're saying, but then when I'm by myself doing it, like it's just start to freak out because then I don't know if it's gonna come back enough. I didn't know what to do. What you just did with the Magento thing? I didn't know how to do that. When to do it? Like to move the.
So I'm constantly moving them down, right? Because if I were to get out of these trades right now, you're basically losing 30 pips. But if you get out of these trades here, you're losing 9. Is 9 better than 30? Absolutely it is, right? But we have trades on here because we allowed ourselves enough movement. We have trades that we can put on here that we're making 15, losing 9. Does that make sense? So we're losing 9, 10 pips on that trade. But if it goes all the way up here, we're making 14 or 15. So we're netting still 5 or 6
So
pips.
you're reducing your losses and you're actually making some to balance it out.
Right.
Okay.
Unfortunately, where you get into a little bit of trouble is those marching markets that just get away from you. If that happens, I might just jump out of this altogether and go find a more a pair that's more conducive to that style, right? So the thing that tells me I wouldn't be trading this, and I probably wouldn't be trading this, is because I have no data over here. So I don't like this pair for that.
But can you increase the visibility to see more, or no, or go to like
for sure. The 2500 is the largest that you can see, but
still you can't see
there's
that.
nothing
Got
there
it.
because it's been going down for so long, right? But on the 5-minute chart you can, and so I'm like, if it crosses over this right here, it could go down for a while. But again, we're kind of oversold, right? Over that price cycle that we were talking about. And so for it to jump up to here, I feel pretty confident that it will. The only thing that is telling me that it won't right now is these wicks. I want this body to close on top of that,
Got it.
right? Because basically, if you're thinking about like a cliff, I want it to climb, and this is the ledge that it can stand on, right?
It's too faint if it's on the way.
Right? If it's a wick, it's just kind of reaching for the top. But if it's a body, it means it's standing on top.
Got
Right?
it.
And so if it's standing on top of this one, the chances of it hitting that is pretty good.
Yeah.
And so we're taking a loss on here, and I probably would throw a little bit more on.
So how did you decide to, I guess, to keep some of them, at a certain point, is just so that, and not move them all? Is it because of the price that you bought them at?
Yeah.
Okay.
So I did move them all. So all of these are right here.
True.
Right?
Yeah.
All of these are now aligned here. And I just threw a few more on to take some profit here. I'm only taking 4 pips of profit there, but I wanted to get a little bit more on because I felt like we had a heavier amount up here and this was lighter.
Got it. So so the yellow line is where we place the order. Okay.
So one of the things I want to show you is that we just crossed that, like I was saying. Now we're standing on top of it, so the chances of us hitting that is really high. But if it doesn't and it stalls right there, see, now we lost, but we're only down 10 pips. But that was a huge move. That was a 50 pip move that we didn't anticipate. But because we did that, it really mitigated our loss. Now let's jump over here to our order history and kind of show you that here's our bad losses of 13 pips. But remember, these were losing 30, 40.
Yep.
And now we only took a few of them at the 10. But look, so that 14, we won 14, 13, 11, 13. So kind of would take out these right here. And I should have threw a few more on to do that. But that's the whole principle of it, right? And so, but the beautiful thing about it is now we can do this again, and I'll just get into a sell and go this direction. Because it wants to go down. So I'm gonna say, okay, it wants to go down, let's let it go down. A few.
A few? How did you?
That's my order history.
Oh, okay.
So I'm only at
14. Wow, that was a lot of finger movement for 14, but yeah. Good.
So I'm in 14 trades at 0.28 position, right?
Okay.
So if it comes down, so then I'll take my magneto, go sell, check all, continue. Where on this chart do you think that it's going to come down to?
I would say maybe below this wick, this last one. The wick. Oh no, you only count bodies, so it should be the green or the blue candle right here.
Okay, but we remember we want it above this because we don't want it to have to break through it to get our take profit, right? So where should we put our take profit?
Well, I guess over here and with this line.
Right there. Do you see that? I think I sell, check all, continue.
So yeah, explain that to me again.
Okay, I will.
Thank you.
So it's coming down. So again, do you see this? What I'm looking at right here is this right here, this little trend going down. And so the likelihood of it coming down to here is good, but it's not great. So in the world of probabilities, now that it's up there, the likelihood, so this is a little bit of a floor right here. This is a floor right here.
Yep.
And as it climbs up right to here, it's probably the likelihood of it hitting here is greater than it hitting here. Would you agree with that?
Okay, yeah.
So,
It
but
wouldn't go that low.
right. So this is kind of a floor right here. This is a floor. It's still not out of the realm of where I need to adjust this, and so I feel like it can still hit that if we were getting a little bit greedy. But our price, our momentum right now with this pair says that it's getting a little bit, it has the momentum to do that if these candlesticks hold true. So what I mean by this is like the same thing, same concept with the ceiling. You don't want to dig through the ceiling to get your treasure. You don't want to dig through the floor to get your treasure.
Okay.
And so you put your treasure on top of the floor or right below the
So
right below the
sooner
ceiling.
before it hits that resistance.
Correct.
Just to give some cushion if it doesn't get there.
Right.
Got
So
it.
it came down to here. It touched this. If it breaks this, there's a great chance it's going to hit that. If it doesn't, then we need to probably do the same thing that we just did, where if it breaks up to here, we move this to here,
Got
we
it.
move it to here, we move it to here, and you keep moving it up until you get out of it with a little bit of a loss.
Got it.
Right?
Okay.
Because I don't know if you noticed, but we were like 0.8 on the loss.
Yeah.
But we backed out of it at like a 0.10.
Okay.
Right? Because we managed those losses.
Okay.
Now, you're going to take losses.
Yeah.
Just expect it that you're going to take losses. And so, do you dictate the loss or do you let the market dictate the loss?
I'd rather do it.
Yeah. And so, by going into if you go, okay, I got to move it here, then I got to move it here, and I get to continue to move my take profit until eventually it comes back and hits it. Well, it's going to be better than if you just hit this X and take out.
Just let it. Yeah.
Right?
Okay. Yeah. So I didn't. I mean, I've been saying this the last 3 days. I just didn't see it in such detail. Yeah.
I'll throw a few on right here because it wants to trade in this zone, and we'll pick up those really quick, which it just did. So for our spread's crazy. Do you know what I mean? So I just picked up a few trades
Got
along
it.
the way, right?
Yeah. It's
So I'm still
possible.
managing these trades, but I saw an opportunity to get some quick profit.
Yep.
So I took it.
Okay.
Right? Because it bounced up here, quick profit. So if it comes down into this area right here, I could cancel these out for, I could cancel these trades out for basically break even, right? And because I just put those other trades on and got 4 pips on those, if these are break even, these more than make up for those.
Okay. Got it.
All right. So I'm always managing my trades.
Yep.
Right?
Okay.
I'm like, okay, you know what? And so, but I don't say that these were bad because I'm only in 0.32%. I'm not in really heavy. It may look like that because you have a lot of trades on,
Got it.
right?
Yeah.
But all of this could be just one trade if you're trading a quarter lot,
Okay.
right? Or 2 trades or whatever, right? I'll go all the way up to 50% before I start feeling like, okay, I'm getting a little bit heavy. 50% of your trading allotment. You with me or am I going too fast?
No, I'm getting it. I just don't know if I'm going to be able to do it by myself when I'm
Well, you can watch this
go
video.
back up.
That's why we're
yeah.
recording it.
Okay. Good. Thank you. Good,
So
good,
right
good.
there, so look, I'm up 33 pips. If I got out, I'd be
Yeah.
winning on everything, right? So if it stalls like that, I generally just get out. Because what that does is I still feel like it's going to break through here, but now I can get on in a better position.
So you're selling now again because you think it's going to go up regardless.
Well, I'm selling because this is this channel right here,
Okay.
right?
Got it.
And I still think the market's oversold. So I still think it's going to go up, but we have a couple cycles before it'll do that.
So there's a point where you can actually make a quick, make money as is doing it right now, going down and you will be selling. But there's also the other when you see that is going long, that's when you're buying, so that when it turns, then you're making money on the turn.
Right.
Okay.
So it's basically what I'm doing and showing you right now is a method where you can wash, rinse, repeat, wash, rinse, repeat. You know what? We were wrong on that first trade setup, but now look, we're making money.
Cool.
Do you know what I mean? So you just do it 2, 3, 4, 5, 6 times. You're wrong on the 7th. 2, 3, 4, 5, 6 times. You're wrong on the 7th or 8th. You're wrong on the 7th, 8th, and 9th. We'll do it again. Do it again, right? So one thing that I look for too is where are these wicks forming? And right now they're starting to form on the bottom. What does that tell us? If we have more wicks on the bottom,
that the trend is going to tend to go further down.
no. So a wick is pressure.
Okay.
So if there's pressure,
To go
it's
up.
pushing it up.
Which is
So
showing
if there's
now.
more wicks on the bottom, then there's pressure to push it up, and so I'm not going to get into a sell because you see that it just pushed it up. Now if it breaks this line, then it's probably going to go all the way up to here. So it's not a good time to get into a sell because
Got
we
it.
started seeing wicks on the bottom.
Got it.
So I read wicks a lot.
Yeah.
I read wicks a lot, and I read price action.
Okay.
Right? Because this is an abnormal move right here, 50 pip. But now we're kind of back to that 18 to 20 range. Well, it's kind of slowing down a little bit. So, so this one was 13. I don't know. I'd probably just call this one right here. So 20. Remember, we measured that as like 20. Then all of a sudden we had an abnormal of twice the cycle, and then we went back to 20. So I still feel like we might see another downtrend, or.
And you don't use any indicators when you're doing this. You're just reading the candles.
I'm just reading the
and
candles,
stuff.
reading price. And the reason why I like that is because if you can do that, you can pretty much trade anything. And I love, this is my favorite trade setup, is when you have one candle and your take profit is inside that one candle or right on top of that, because the chances of it coming back down is pretty good.
Is that the one to go like 3 candles and then 3 candles go down? Or no?
That's a 3-bar reversal, I think is what you're talking about.
Yes.
And that's good too. But I love this setup when I can get profit inside, like, it doesn't have to move very far movement in order for me to hit my take profits. And I probably got a little bit greedy here because I went to 4, forgot that I was at 4. And I would have got those if I was at my normal 2. Does that make sense? I say that a lot. I'm sorry.
No,
I'm
that's
just trying to make sure that I'm not going faster than you're understanding. But
No, I'm good.
This will be a great video for you to watch over
again.
and over, right? So, again, we're only at 18. We're not in really heavy, but the experience that we're getting right here is really good,
Yeah.
right? So,
So now it's going down, and that's where it's all okay. Closing. Okay, good.
you see
Nice.
that we're at 17% profit.
Nice.
So how I trade, and you're up 118 pips. How I trade is in the morning, set aside 1 hour of trading.
Yep.
And that hour of trading is don't bother me, I'm trading, right? So, and it's just for 1 hour. And in 1 hour, I try to go for 1% or the hour's up, right? Generally, I'm usually able to get 1%. As you can see, as we can continue to do that for an hour, we're already at 20% in 20 minutes, right?
Got it. Just gonna say something. So how do you decide? So you only trade, like you stick to one pair, or how do you're looking at the charts and then you see if it's the downtrend and all of that. So the way we started. So that's how you decide where to stick with. So you don't go back and forth.
Don't jump
from,
around
like,
to pairs. No.
Okay.
Like
got
Todd
it.
does. Todd does that a lot.
Yeah.
You know, the HMA strategy, he looks for a certain setup.
Yeah.
Which there's nothing wrong with that. Absolutely, there's nothing wrong with that. But I love to trade this way. Like right here, it showed me that. So guess what I'm going to do?
Yeah.
I'm going to buy, right? So you get in, you wait for that error message to come,
Yep.
and then you hit enter a bunch of times
Got it.
to get in this trading methodology, right? So I'm going to get in pretty good here because it's flickering, and I love that flicker.
Because it could go up.
It could shoot up, which I anticipate it to do, but if it goes down, well, it's okay because I'm going to be continuing to buy all the way down here.
Got it. I just have to refine that, like when to decide to, like, I understand this because you're seeing the trend, but where to stop to do that, that's where I
Where to
don't-
stop?
Yeah, so we're stopping. So here, you said that you would buy up until here. This candle or that candle?
Probably right here when it goes.
Okay, those two candles.
Because it's going to have a hard time breaking that.
Okay.
But if it does, then these are all dead trades, right?
Got it.
And that's something that a lot of traders don't look at. When to call these trades dead trades. If you're calling it a dead trade, not the market's calling it a dead trade, then you have an opportunity to get out of it at a minimal loss.
Yeah.
Right? If it breaks this, those are dead trades.
Got it.
Right? I don't anticipate it to do that because, again, price cycle says there's 10, we're at 14, we're still playing within that 15 to 20 range. So it comes down here to, 16, it's going to bounce back up. And the other thing I love is I love this magneto right here.
I only saw it for the first time maybe yesterday or today, and now you're using it a lot, so that's pretty cool.
So I sometimes you can't put on top of each other. So I'm gonna put it right there. That's a good spot for it. So sometimes I'll just put it out here to kind of clear the clutter, and then I'll bring it back to where I feel like it's gonna hit.
Once this starts going up, do move it.
I just move it right away. And so on here, on this trade, I'm making 8, but on this last trade, I'm still making 1 point. So I'm still making money on it.
Yeah.
But because I broke them up, some trades I'm making twice as the amount, but I'm still making money on all my trades. This is something that I'll look at too. Right now, if I were to close out, I'd be losing.
Yeah.
But right now I'm winning. I'm breaking even basically.
Well,
and so if
it
I'm
moves so
nervous
fast.
because I'm in heavy, I may look at that and be like, oh, I'm breaking even. I'm going to get out all my trades and hit that X button.
Got it. Okay.
Right? If I'm nervous about these trades that I got on.
Got it. Yeah, well, I haven't gotten to the point where I'm like, oh yeah, let's exit out. I'm like, no, it's gonna come back, and it never does.
So that I used to be in that mode. Don't think of it that way. Don't think of it as it's gonna come back and take me out, because I think if we think of it like that, then we get into a mindset of I have to be right.
Yeah. Well, coming back to actually,
Break even
to take the profit. Yeah.
I don't even worry about that
Okay.
because just take the loss and move on to the next trade, right?
Got it.
Somebody said in our last, somebody said this, and I love this quote. Is that always look in the windshield, not the rearview mirror, right?
Okay.
Never look back at what you coulda, shoulda. Always look forward. So don't ever think, oh, if I just left it on, it would have come back.
Yeah. Okay.
Don't worry about it. It's
Just
past.
catch
It's
the
done.
next-
Just catch the next opportunity,
Yeah,
right?
okay.
And so that's what I'm showing you right here with a ton of trades on. If we hit it, great. If we don't, and we take a loss on that round, you at least are trading another round. You're not
Wow.
locked out.
It's good.
Do you see? Do you see that?
Yeah.
And now we're at 0.5% already, right? And so, again, it's doing the same thing. Right here.
And you're selling now because you think it's gonna keep on going up for now and then break again, or?
Because that's kind of a bigger candle, and so I think we'll get a jump down before it jumps up. Because we're at the top of that ceiling, it's not going to break through that ceiling. Do you see that?
Yeah.
It's there's the likelihood of it. Sell, check, continue, okay, and we'll go ahead. I'm going to just clear the clutter. Sell, check all, continue, okay. And I'm going to put it right there. All of my trades right there. Do you think it's likely to hit that?
Yeah.
We're not asking it to move very far,
No.
right? And it has been for the past, since we've been sitting here, moving that far. We're not asking it for it to move that far before we take profit. So we're not asking a whole ton out of the market. We're, like what Sean says, we're taking little sips.
Yeah.
I'm taking little sips out of the market. Now, I probably went in a little bit heavy, but because I believe that, but I'd get in here on that bounce up and stack a few more on, right? So I'm probably gonna, if it bounces up, I'd get into a few more, because I anticipate it to come down and kind of hit that level, right? So so if it goes against me, it's fine. I'll just put some more on. But each layer, like I would say, this is one trade layer.
Okay.
I probably put too much on this. It will get heavy. I probably would be more comfortable with like a quarter, right? So maybe like half that, a little bit less than half, so that I can have enough wiggle room to take advantage of that movement right there.
Okay.
Right? Now we got one wick, it's a good sign. If we get another wick, it's even a better sign, and it'll come down and hit our take profits. I'm gonna move this guy a little bit down here. What was that sigh?
Because I want to be able to rotate it so that I can repeat it, but I'll just have to watch the video over and over. I just
No, in a second here, I'm going to have you teach me.
Yeah.
Yeah, in your
Habla español.
Yeah. See?
Damn it. Oh, Jesus.
Alright, so I'm going to get into another one. And honestly, I would have gotten out right there on a stall. I always get out on the stall because whether I make 2 pips or 1.8, it doesn't matter, but I'd rather be out so I can put more on. Right? I like getting in and out, in and out, in and out, and getting profit. Right? I don't like sitting and waiting. Oh, well, I hope it comes back. You know, I don't want to wait 20 minutes to take profit. I want to get in and out, get in and out, in and out, right? So if it comes down into this area, I'll probably just get out all of them and take a 1.5 pips because I don't really care. I mean, I want it to hit my take profit, but I don't need it to hit my take profit.
So you wouldn't move it, you just leave it there to see if it comes, otherwise you close it out. So
manually, right?
Yeah.
It's because I'm a little bit, because again, if it crosses this area, which it looks like it wants to do, then all these trades become losers. And I would rather take a 1 pip profit than take a 5 pip loss, right? So I'm always getting out, looking for opportunities to get out. And one of the other things I do is I put my worst loss on the top, so I can get out of these
faster,
right?
Okay.
So right now we're up against a spread. If there was no spread here, these would pretty much be break even. Because that spread's pretty big at 1. But we just get one dip down, I'm going to get out. Which I'm confident, I'm confident that we will get a dip down.
Oh,
just
there
like
you go.
that. So we'll go ahead and close out all these trades.
But they were positive, no?
Yeah, they're all positive, and we're all.
Oh, okay, got
out.
it. So you want to do it now before it retracts?
We're out.
Got it. Okay.
See, now we're at 0.5% positive.
Got it. Okay, got it.
Right? So the same thing. All right. So if it comes down to here, what do we do?
When we start buying.
Why? When?
When it gets down to that wick over here. I mean, this body over here. There.
Okay.
Even though it goes green.
You teach me.
Oh, Jesus. And then we said we went enter.
Kind of. We want to wait. This is not price. Do that again when it turns blue.
Blue again. Okay.
Right? Because we would love that take profit line to be right under this. Again, we don't want to. If you think of this as a mini ceiling, like right now, buy. I'd buy right now.
And then it goes away. Okay.
Just do a couple more. Okay, we're good. Do you see how that take profit line is now under that? It's a lot higher that's going to hit that than it's going to hit that.
Say that again.
There's a lot higher probability
that
it'll hit this one than it will hit that one. And it's
top of this one.
and it's just like a little tiny bit far away. But in terms of it has to break through to hit it, that it makes it more difficult. Even though it's like only 0.5 pip further away, it makes it a lot more difficult. So I'm not greedy. I don't care about 0.5 pip. I'd rather put it in a position where it's easier for the market to get.
Okay.
Do you understand?
Yeah. I mean, we're scalping, so any
positive is good positive, right? So right there, if it stalls, get out.
Like just
right now, just hit that red X. Okay, you hold on.
Yeah. Oh my God, Jesus!
But so you're always like constantly really close because like there, it stalled to get out, it came back down like I'm talking about.
And again, already got it.
Right.
Okay.
And so if it stalls and goes back, well, you just got out. You took a pip and a half profit, but now you're ready to get back in again. constantly wash, rinse, repeat,
Like,
wash, rinse,
heart
repeat.
in your mouth
But
the whole time.
but do you see how
Yes,
trading can be
yeah,
fun
yeah,
because
yeah,
it's fast
good.
action.
Yeah.
You only have to do it for an hour.
Yeah,
And
I see.
and you know what? You're gonna lose on some. Like we took some losses, but overall on the day we're up, and you can see how we can continue to do that.
Yeah.
I mean,
Yeah.
do you getting the feel for it a little bit?
Yeah, I was doing it, but I had no method. Like,
Yeah.
just seeing, you know, it was, yeah.
So this is basically what we call the wobble technique.
Oh,
This is the
okay. So
wobble
now
technique
it
that I'm
sinks
teaching
in.
you.
Okay.
Right?
Okay.
So you're just taking a lot off here. You're putting a little bit more on here. You know what I mean? You're stacking it into different positions. So now what would you say we do?
I would sell.
Okay, just go ahead and get into one. Just get into one real fast. Okay, that's good because it's kind of light. If it bounces up and it goes against you, what do?
I start buying. No, I close them all here.
No, if it goes, it goes up here. Let's get into some more cells really quick. So we're getting into some more cells right there.
Okay.
Okay, now let's use that magneto line and put our take profits right on top of that.
Tell me again, it's here.
That one, magneto profit. And then grab your cells, yep. Check all. Continue. Okay. And then just kind of put it over here to clean it all up.
There?
Sure.
Or no, was too high?
Well, so do it again. So I'll teach you. Magneto, take profit, cells, check all, continue. Okay. Now you want to click on an area that doesn't have a line on it.
Okay, like
So
here.
right there, and it puts them all there.
Got
But
it.
that's not where we want it.
No.
That's just to clean it up. We want it right there. So you
Right
have
here?
to do it, yeah, but you got to do it one more time. So this is just the cleanup time, remember? And then you do it one more time. So do magneto.
So sell, check all, continue. Okay, and then just place it
And then click on the chart right above that floor.
there.
Yep. Do you see how you do that?
Yep.
So
Just one click. And first, it was just to move it down to clear
first
up,
is just
and then
clear
it's
them all out of the way so that you can see where the best placement is.
And then again, you're putting it here because this is before the bottom of this candle.
Correct.
Okay.
Well, not the candle. It's the floor.
The floor.
Right? So
Okay.
think of it in terms of ceilings, floors and ceilings. We don't want it to break through the floor to get our pot of gold.
Got it.
Or the ceiling to get our pot of gold. We want it to be right on top of it. I don't want to break through the table to grab my
To get
money,
it.
right?
And so this doesn't have anything to do with any of the other, I guess, supports.
Well, it does because if you look, there's some, and so the more that you have, the more solid that floor becomes.
Okay, got it.
Right. So this I would say is more of like a wood floor, but and this one would be like a toothpick, but this right here is more like a concrete floor.
Got it.
It's going to take a lot of
More time
momentum
to
to
get
break
it there.
through, right? And the more time it tests that, like it says, do I want to break it? No, not yet. No, not. More time it tests it is like pounding, and like third or fourth time testing is going to break it,
Okay.
right? Because it's pounding on that floor, pounding on that floor, pounding on that floor, and eventually it breaks. And so you want to make sure that you're not in a bad position. So go ahead and sell just a couple, because we're not really in the optimal, but I always have this ready to go. Like if it popped up like that, I would have gotten in on that top part, right?
Got it.
So it's kind of making another floor right here, but if it comes back, just go ahead and sell. So, and we'll just leave those there. So we'll go ahead and leave those take profits there because,
It stopped there.
yeah.
Very good.
No, you're fine. So if it bounces up,
More? No, not yet.
well, I mean, so we're only in 0.26, so we're not in heavy at all, right? We're
But
not
it's
in-
okay because it's okay. That's where. Yes or no? Just
Yep.
a few more.
Sure. So now,
And now then what'd you
but-
do?
so now here's that ceiling, right?
Oh,
So now if it crosses that, which it just did, but the wick is okay. If a body on that, if it crosses that body, then we need to adjust our trades.
Okay.
So I'm gonna do this because I needed. So you just gotta get better and more quicker
faster,
at it. So I'm gonna just put all my take profits there, and then I'm gonna go sell, check all, continue, okay, and I'm probably gonna put them right here. So I'm losing on these guys, which is okay. I'm okay to lose on those guys, but I'm winning on all these others.
Got it.
Right? I don't care. These are now what I consider not high probability trades.
Okay.
Right? Because we went up and we crossed this range right here. And if it goes up again, I'll take my take profit and put it right on top of that. And I'll keep moving my take profit up and putting more on, so I always have some profit and some not profitable. Right?
Balance it out.
Balancing it
Okay.
out.
Yeah.
Right? So that's why I love trading with the 0.02, because it gives you the ability to put more on, take some off, put more on, take some off. Right?
Good.
And you can see that when volatility is moving, you can see we're taking profit, putting on, taking off, putting on, and it can get really quick.
Yeah.
It can get really quick, and you got to be able to pull the trigger really quick on that. So
Right there, you would do it again, or no?
if it crosses this, we're gonna get into a little bit more fix it mode, but right? So you gotta know where this is right here. But if it's gonna be hard to break through this on the up, right?
So
Because if you look here, we're still holding true to this trend, which is right here. We're still holding true to that trend.
Okay.
And so we're okay, but if it starts to trade up into here, it means it's done a trend reversal,
Okay. Got it.
right? So you're okay to continue to sell all the way up into here. Then you got to be into fix it mode, where if you got sells down here and it's trading up here, well, you shouldn't have sells down here because we should have took those as losses. But if it shoots up in one bar all the way up here, then that's what that's what this is for, right?
Okay.
The stop losses.
And that's when you turn and you start, not buying, selling, right? But you could buy too.
You could buy. So we've been buying, selling, and look at those wicks right there. What do those wicks tell you?
That is pushing up. Now this pushing down.
Yep.
Pushing
You
down.
got pressure coming in, and so again, if we're looking at price cycle, the last few little bits, we got a 7, we got a 10, we got a 15, and this one we got a 15. So right now, it's a good high probability that it's going to turn and come down.
Okay.
Because we're at the end of that price cycle, the pressure's coming in, it's pressuring. When we really feel comfortable that this turn's going to happen is when it crosses this body right there.
Okay.
Does that make sense?
Yep.
So when it crosses this body, we're like, okay, if we can get a wick to come down here, or not a wick, but a body to cross, then we're standing on top of that and we're going to hit our take profits.
Got it.
So we're still in the trade that we want. It hasn't gotten away with us. These trades right here, yes, those are going to be losing trades. But we have enough on right here to compensate for those losses. You with me?
Yep. So far, so good.
Okay.
Right there, you keep on selling.
So most new traders would be like, it's going up, I gotta buy.
Yeah, no, I learned that to do that.
Yeah. Or it's going down, I gotta sell.
But just intuitively, I was doing that because when I was doing the reversal, I didn't know, when to do the opposite. So, it was buy low, sell high.
So if it can break this, we're in a good position. If it breaks to the upside, we gotta do a little bit of fix it mode.
Okay.
Right? But you need to learn fix it mode.
Yeah, but when to do it. I mean, that's
And you need to learn that and not be so emotional about holding on to trades and saying, it's going to come back, it's going to come back, it's going to come back. No, get rid of them and put them on in a better position.
Yeah, I got in trouble today and yesterday because I held on to
Trade's too long.
Trade's too long. Yeah.
Yeah, I mean, I think every new trader does it because we have an inherent, as human beings, we have an inherent ability to want to be right, and you can't be that way with trading. You got to be really systematic, like we just did for the better part of, 40 minutes. We were very systematic in our approach. Losers, winners, losers, winners, losers, winners, and we were up. If we can take these ones out, we're up over almost a 0.5%. See, and now we're in a good position. Do you see that? Cross over that. If the body closes below this, we're in a really good position, and we got 30 seconds before the close of that candle. And so it's like, do I want to cross it? It's like dipping its toe. Do you see that stall? Again, on that stall, if I was closer to where I wanted it to be, I would have took my, because that stall always says, no, I'm not. It's water's cold. I'm pulling back, right? So it really has a life of its own, but we still have 10 seconds for it to make a decision where the body is going to close.
See, all of that I learned yesterday and today. I didn't know what those numbers meant, and the flickering, and so
all that stuff. So it didn't break. It was a false break because it only broke with a wick. But we're still in a decent position. I just hate that when I'm like, okay, it stalled. My strategy says if it stalls, I get out.
Okay.
And then I just put more on. So I should have gotten out, but I was like, I still feel like we have it's going to turn here.
Okay.
If it doesn't, it doesn't. And so you kind of already thinking forward. Okay, so let's pretend it doesn't. What do we do? Let's say it goes up. When do we close them out?
Well, as soon as it starts to turn blue, so there's not that many losses?
Kind of. So we want to continue to move this take profit line up to the next level, then up to the next level, then up to the next level.
Okay,
right?
okay.
So if it gets does that, but I mean, and more of that, it's got to cross this before I start to panic. Here, I'd just be like, I'm just going to throw a few more on. Right? So really, it's got to cross. I'm playing at the top of this range, right? And I'll throw a few more on, a few more on. I'll just get up to, now we're at half a lot there. So getting these ones right here will also help with these ones that we're going to take losses on.
Okay.
Right?
And you just leave them there. You're not going to do the whole magenta thing. You're just kind of, because you see that it's coming down.
Right.
Okay.
So I'm just going to make some quick profits. Probably going to back this down to 2 because we're not seeing the bars so fluctuating. So on this guy, I'm going to move him up into here because that's profit range. That guy up to there. You see that? I don't want it to have to break this, which it hasn't done except for this guy. But it's hit this 1, 2, 3, 4, 5 times. So the likelihood of it hitting it 6 times is high, right?
Got it.
But again, we're up against that spread. Here's that stall. If I didn't have these trades on down here, I would just jump out of those trades because it's stalled.
Got it.
Good?
Yes, gotcha. I'm definitely going to have to watch this again and again.
Is this like a crash course?
Yeah, but it's pretty cool because, for the last 3 weeks, I've just been doing it intuitively and winning some, losing some, and not ending positive. So it's really frustrating. So yeah, the reason we came here, we wanted a strategy that we can follow it back at home.
So I'm wobbling right here, right? So I may peel this loss off right here, this bad loss, but
those big ones.
Yeah, but come on, really? You're gonna do that to me? This is the part where I get frustrated when it just plays around, and then just takes forever to hit it,
And then you still have, 30 seconds to it.
Yeah, because in the first 30 minutes, we made the majority of our money, and then the last 20 minutes has just been messing around on us, right? So,
So you usually stay until you make like 1%. Is that what you said?
For an
Like
hour.
for an hour, and then whatever you make on that hour, that's it.
Yeah.
Okay. And you don't get back on that. Like it's just in the morning for about an hour, and that's it.
Yeah. And the reason why I do that is because
You can overtrade.
yeah, well, and life.
Well,
Like
okay.
a lot of times, sometimes I've gone to the office. Yeah, we're recording. Yeah.
Sorry.
Jump in, help us out.
A lot of times I'll go to the office and I trade, and then all of a sudden this guy says, "Hey, let's talk," and I'm like, and then I come back and I'm losing, right? So I learn to not trade when you have other things going on,
True,
right?
true. So okay, well, so you just said you just see at the chart and then you choose where to, but it's not like, do you have like a favorite? Like some people were saying the Japanese, or some of them were saying the London market. Like, do you have like a favorite because you kind of like see the trend?
Yeah, I do. I mean, I love the Euro USD because the spreads are just the best. So I trade that in the morning, and then in the evening I may do the Euro JPY. I chose the Euro JPY because it's not associated with the dollar, because the dollar is going crazy right now.
Yep.
Right.
Okay.
So, but normally I would probably trade the USD JPY, right?
Okay.
The dollar, since I like the pairs around the dollar, right? So, I think we're in good position here. So, what I'm probably going to do here on this is when this comes down to like break even or whatnot, I'll probably just jump out.
Okay.
You know, because it looks like volatility has just completely shrunk out of the market, and you could be sitting here a while before it comes down into this zone, right? But I
So
do
as you
think,
close that bunch there, and then the rest of them are just taking losses,
yeah,
but you still end up
there's just still end
with
up on the
positive.
day, right? And so don't be like, I have to make these winning trades.
Yeah, well, no, I mean, at this point, I just get up when they have winnings. Thank you.
How'd you guys do in there? How did they
He
do?
always wins. I tried to follow what he was doing, and somehow I'm negative. So
How did Sean do?
I couldn't really see. It's hard. Most all the way back, it's hard to see exactly. But he was a little bit in positive. I never seen him lose.
Okay. I was just wondering, because sometimes we have competitions.
A lot of volatility. A lot of volatility.
That's funny.
It was hard to gauge. He was moving so fast.
What was he
Between,
trading?
What was he trading? The pair?
It was Euro JPY.
Okay.
And US JPY.
Well, we were
So we
doing
were
that
doing,
then.
yeah, we were doing the Euro JPY.
How you
Take a
guys
snapshot of this. Oh, well, he sees the video.
doing?
The same, huh?
Yeah, you better
Get this right, because
get this. You can tell me.
well, you can watch the video
I
then.
don't want to hover, so I'm gonna go upstairs.
There. Okay.
We're gonna.
Thank you.
Yeah, we might be in good position here. But if it stalls, I'm just going to close out because I don't want to give it all back.
In there?
Yeah,
or-
like that. I should have closed out, but that's okay. Because I want this to close this right here. If it closes below, which it could, and it's going to, then we probably can come. It's probably gonna come down again. Do you see that? How
Yeah.
it broke through.
Yeah.
Finally broke through, and so it's gonna have a harder time breaking back up here than it will to go down.
down.
Right? And so this might be exactly what we're needing, but it's gonna have to break. Sorry, it's gonna have to break through this area. So I may just close out again once this gets to zero, right? Unless we see a good downtrend, it's just because volatility has gone out of the market. Or if it comes down, I'm gonna jump out right now.
Yay.
See,
Pretty cool.
we're at 68%, about an hour. I'd go for another 10, 20 more minutes, and probably and be 7, 8 of 1%, right?
Okay, so I'm gonna go quit my job and just kidding. No, I probably have a couple, well, I mean, I just don't know. I feel like I just need practice.
Okay, so now, what would you do here?
I would buy
Why?
because it's going down. And then again, eventually, I guess either here would turn or here.
So I love this because that was an abnormal candle. It's not anymore, but so an abnormal candle, I love the abnormal candles because it's 2 to 3 times the size. So we're just going to go ahead and do this so I can show you the point.
This is before we like miss it.
Yeah. So I love this right here.
Oh, wow, it just keeps on going.
I'm going to move this over just so you can see that. Oh, guess it.
Nope.
All right, so now we're stopping, right?
Okay.
But it's an abnormal candle because it's 2 to 3 times the size of that.
Yep.
And if it continues to go, I'll continue to buy until it gets that pullback. And so here comes the pullback right there. You see that?
Wow. Yep.
And so that is like, I'm going to get in really heavy and capitalize on that because it's an abnormal candle. We got that pullback. Now it's flickering. Let's go ahead and close those out. Right?
What do you do, huh?
Now we just, I probably should have upped this because I wasn't getting into trades as fast as I wanted to, but I could have upped that real fast and then hit the same thing. Right?
And then that would have been higher, I guess.
Capitalize on that. Do you see that?
Yep.
That is one of my favorite trade setups when it's an abnormal candle just like that, because there's a good chance you're going to always get that pullback. And so I will just load up as much as I can, not getting crazy, but load up on that.
Like, doesn't it like stop you after? Well, it does for me.
It'll stop at either 50 trades or
Your
hit
percentage,
your
okay.
percentage, right?
Got it.
And so you don't ever want to hit that, but that you could hit. So you just got a full retracement of that candle right there, right?
Like here you would sell.
Maybe.
Or you just
Because I kind of feel like it's going to come up into this range before it pulls back.
Okay.
So, but you can see we're buying, we're selling, we're buying, we're selling. We're just looking for the highest probability of a trade that we can get.
Yeah.
Do you know what I mean?
Yeah.
And so we're not really saying, and that's the beautiful thing about the wobble technique, is that even though this market is completely going down, we just made money buying, selling, buying, selling. Where the wobble technique fails is now if we get another abnormal candle, where the wobble technique fails is something like that.
The big candle.
The big marching market, right? Because if it comes down to here, this tells you to buy because we're up against that. And if we were to buy and then boom, it goes down.
It doesn't go back up.
Right?
As high.
I would have closed out of my trades here, but on this is an abnormal candle. So I probably wouldn't have been able to do it fast enough because this is a minute candle, right? So on this candle is 1 minute and it ran 30 pips. So I'd probably be losing on all of these trades that I got on right here, but I would have had enough room to buy here on this candle and then buy, and then gobble that all back up and then get out right here, and these would be losing. Do you know what I mean? Because this abnormal candle, I would anticipate that it would go 50% of this candle. And it did. You see that? And this is where I would get out of these trades. But that's where it fails, is because now you're in an outside range. You have no more data right here. Breaks through this, you're in an outside range, but I'd still play that abnormal candle. Every single time I see an abnormal candle, I'm buying at the end when the candle stops. I'm not buying here, but you see the candle always go, and then it kind of stalls.
Yeah.
I'm buying on the stall.
Right on the stall. Okay, got it.
Right? But guess what happens here? You bought down here, you would have took your profits right here, and then it shot back down, and another candle, buy here, you would have gotten your profits, and then probably I'm still buying because now we're in an oversold situation, and you're buying right here, and then I'd probably be selling on this candle because boom, another abnormal candle, and then stall and sell. So you're making money here, making money here, making money here. I may be buying, or I may be just looking at an opportunity to get out of these trades if I had a lot on.
Yeah, because the chances of this green one coming back all the way up, it was just not.
Right.
Yeah.
But 50%, yes.
But
Always,
not
but not 100%. You get that sometimes, but that's not the play, right? Like we just got 100% on this, and it broke that. If I was still trading, what would you be doing right now?
I would be buying there.
I would say selling down to here. So if it crosses this, which it looks like it might, because you just got 1, 2, 3, 4. When's the last time you got this and then you got 4? The market doesn't trade in a V, so it's got to come back a little bit before it goes up.
So you want to ride the selling wave.
Yep, and then down to about here, then I'd be buying. But that's that's 4 pips, so I got 2 pips in there.
Okay. So you wouldn't buy a lot, you just buy a few.
Mm-hmm.
Okay.
Yep, or sell. Is what. I'd wait till it to come down.
Sell.
Yeah, I'd wait till it to come down here, and then I'd be buying, right? Because it would kind of have a little bit of an uptick, but our overall is still down.
Mm-hmm.
So that kind of gives you a directional bias. But do you see that?
Yes, and the bias is like where the trend is going. Is that what it is, or no?
The bias is the trend. The overall down bias, right? Unless you're in an oversold market, then you could be like, well, it's probably gonna come up. And then the short-term bias would be like if we see something like this, that's gonna come back up, and then I'd be on a sell right here, down to this area. So, questions?
Okay, we start from the beginning. I'm just kidding. No, not a specific questions. Not really. I just have to go back and look at it and try to do it on my own. And I'm sure, again, questions are gonna come up. But right now, I feel like I get it. But tomorrow, when I have to do it on my own, that's gonna be the real test.
Yes. So, what are some of your takeaways right now that you could do on your own?
Takeaways. So one of the things that I was seeing other people do in the classroom was that they were putting the red lines to know, like, when if it gets here, this is when I would buy, and then it goes down. But they were actually doing it at the end of the wick versus what you're doing, which is doing it in the body, so that it doesn't have to wait too long to make some profits. So that's one real big takeaway. The other one, to be able to let the losses go once I see the trend that I'm not going to be able to recoup, just take them off, put them off the books, and then just keep on making money on the next pivot. And so that's another thing. And I feel like now I have a better grasp of the Wobble Technique. Which is counterintuitive if you think about it, because you're buying when it's going down, and then you're selling when it's going up, but not all the time, like in this case.
Right.
Yeah.
So you're fading and building. Fading and building, right?
Yep.
And those are the 2 principles of the Wobble Technique, right? But one of the things that I love doing is what's my favorite trade setup?
Favorite trade setup?
When I said we're going to load up here.
When it's flickering and an abnormal candle.
Abnormal candle.
So you're doing it once it hits the wick, or when it's flickering. That's when you start loading, right?
When at the end of the
At the end of
abnormal.
the candle, yeah. When it starts flickering. That's
or
when
slowing down or coming to a stop, right?
Yeah.
So do that, or when it does stall, close enough to your take profit, but it hasn't hit, just take it out.
Yeah. Yeah,
right?
True. Yeah, I remember.
Because you'd rather take your take profit because it's probably going to pull back.
Yeah.
And if it does pull back, put more on.
Yeah. Okay.
Right? But you're out of you took those profits.
Yeah.
Whether it's 2 pips or 1.8, it doesn't matter. Just get out so you can get more on, right? Because if you get the 1.8, it pulls back, and now you're getting 2 again on another trade.
Yeah.
Well, that's like 3 or 4 pips that you just got, right? So, this has been helpful?
Very helpful. Yes. Because I understood pieces of the Wobble Technique. Like, I had an overview because I've seen Sean doing it, but not the specifics of it. It's like some people say things, but you don't get it until somebody else says the same thing in a different way. So I got it, I think. So tomorrow when I'm doing it by myself, thank you. We'll see.
Well, good.
I'll pass you my report.
Well, we almost got you back to to break even. You're $7 away. So tomorrow, I would say trade in this tomorrow, get profitable, and then don't trade in it. So then you got your 2 days.
Yeah.
So not tomorrow. I guess you have to wait till 6 o'clock tomorrow because the trade. This is today's trade.
Yeah.
This goes on tomorrow's books. So keep this here. Don't trade in this until after 6 o'clock tomorrow.
Yeah. Well,
Jump
we have
in,
the
make a
6
few
hours.
pip profits, and then get out. And then you have then you're into silver,
Yeah.
right?
Yes. After
So,
that.
where's your husband at in Beeline? Are you ahead?
Same thing. No,
Same
we're
thing?
like at that mark with just waiting for the 2 days.
So I'm tempted here, so I'm going to do it because trading is fun. So
Yeah, he started about a month before me, but then when we saw this training, so I got access and I started trading. I mean, I feel like I just started trading, clicking and figuring out and see what doesn't work. Because now I can go back and see what does work.
So we're going to go ahead and buy, check all, continue, okay. And we're going to go ahead and I'm just going to push them right there. Do you see why I put it right there?
Because it's the body of all of the ones there.
I didn't want it to have to cross over, right?
Mm-hmm.
If it comes down to here, I'm still buying.
So,
Again, we're at this price cycle 13, this price cycle 13, so this is a good chance for it to come back up, right? Because we got this price cycle 13, 13, 13, you know what I mean? It's a good chance that you're going to see another 12 to 15 on the up.
Yeah, so another takeaway was that the price cycle. Yeah, and how to do it with the math.
Oh, again, there's that stall, which I didn't get out of. And right there's the stall, and we got out. And I'm good. So
Good.
you made 467 pips
We
in
made.
an hour.
Thank you. That was pretty cool. Very nice.
And
It
this
was
might-
worth it. Just
And this might be an
For this.
abnormal candle right here, which I'm gonna take. Sorry. Just so
can't help myself.
I can't help myself because I'm like, oh, look at that, and then we just made a few more bucks,
Nice.
right? When you see that opportunity, you take it, and you're good. You know what I mean? I probably I did change the quantity. Oh, that's good. So. Do you know what I mean? That's an abnormal candle. It's not a huge abnormal candle because these ones right here, but
No.
I just like, okay, it is to
Okay.
these last 3. So you see a pullback.
Yep.
So what would it mean to you to be able to trade full time for a living? Like, how would that change your life? Like what when you hit that goal, what is that? You know what I mean? Why are you trading not only to hit that goal, but what do you want from this? That makes sense?
Well, to build wealth and have more freedom would be the 2 major things.
What would you do with that freedom?
Build more businesses.
Really?
Yes.
So is that your goal?
Yeah.
To manage more, to buy businesses?
To invest in businesses. I already had been thinking about a business, so I just need the capital to start it up. So, yeah, that would be it, and also to buy commercial real estate. That
Okay.
would be another thing, more so than.
Well, what does money give
residential.
you? What does money do for you? Because what I'm hearing you say is that you use money to create more money.
Yeah.
So let's say that you're there, you've reached it. Now what? What does that do?
So interesting. Just stability. Stability, consistency, security. I think that's what I'm looking for.
Good.
Yeah.
That's awesome.
I mean, Apiary from the beginning, I just felt like it was trustworthy from seeing the initial videos, the advertising, the approach from like the marketing perspective, then entering into the whole portal and starting. I feel like there is a lot of thought put into it to take you step by step, not holding your hand, but giving you the tools so that you can learn enough so that you can do it on yourself, your own. Because like Sean was saying, there's a point where they can't teach you anymore, so you have to go and do it on yourself. So I like the professionalism of everybody that I've met and the Apiary. I mean, everybody's so helpful, kind, knowledgeable, and it's just they take individual responsibility or ownership to make sure that you learn and you're doing it on your own. I just feel like it's like a chain. So if I'm doing good, everybody else up the chain is doing good too. So that in turn also allows me to think in the future, maybe I should be teaching other people and helping other people do what I'm doing now. Yeah. It's possible, So that would be another thing that it would allow me to do. If I am making money, I would like to teach other people how to make it too.
That's awesome.
That would be one of my goals.
To help people.
So they can learn faster and they don't have to struggle and go to college and waste 4 years of their life. They can be learning this and master in 4 or 5 years and making money. And then maybe in Spanish too, doing it. So I feel like this is a whole, it goes full circle. You have the teaching, you have the support, and then you also have the system, Albia, which is, I'm sure it costs a lot of money to maintain, and, servers and internet and all of that stuff. So it is a great tool to have, which I didn't see with other teaching, methods in schools. And maybe they were, but they were more expensive to get in. And I don't think you were getting as much as what we're getting in the Apiary Fund. And the experience here, it's been great. I mean, just this video alone, it just paid on its own. But just sitting and watching other people do it, people that actually are earning income from this, it gives you a perspective, gives you hope that you can actually get to do it, because there's people from all walks of life. It's not like people in the financial industry, but then we have a doctor, and we have a college student that started doing it from the beginning. So it just it just shows that if you just apply yourself to do this and you stick with it and you practice and you trade, that eventually you'll be able to emulate everybody that's been doing it. So far so good. Really, we're impressed. We are very happy and excited to hopefully, eventually be able to do it full time.
Well, good. I know you will as long as you stick with it, because, it takes a lot of repetition to do what we just did. But you can see that there's a process.
Yeah.
Right?
Yep.
You just kind of wash, rinse, repeat, and if you can get it down to that wash, rinse, repeat, you can be consistent, and that's what it comes down to, right?
Yeah, the strategy that we came for, we've got at least the Wobble and the shotgun, at least those two that we can lean back and, perfect, and then maybe later on add other ones. But for now, just really focus on those two.
Well, thank you so much for helping us out on the live, and being willing to be on camera. I love being able to sit down and talk with people and to kind of teach them how to just give them a little bit of where they're at and hopefully push them a little bit further. I tried not to go too deep into. There's a lot more involved, but I try to keep it really surface, and hopefully, maybe you'll have to watch it a couple times, but hopefully you'll pick up on it, right? Yeah. And there are more things like luckily or unluckily, we didn't have to get into massive fix-it mode. Yeah. But sometimes you learn a lot from that, right? Like how to mitigate your huge losses, right? So that we don't hit those 5% losses. But you saw at the very beginning, we took a loss. Yeah. We were in the negative, but overall, the session we ended positive. Yeah.
Yeah.
And that's what you got to look at. It's like, I don't care if I take a loss. I don't.
Yeah. I mean, I don't care that I did the 5%. I mean, of course I care.
Right.
Because it's real money. I was in a funded account. But I care that I'm actually doing here in a safe environment where I can actually, Ivan was trying to help me to get there. And then he left. And I'm like, what am I supposed to do here? So, yeah, it went, I lost a lot of money. But sure. I feel like if I rather I'm happy that it actually happened here,
Mm-hmm.
so that I was able to see how you can fix it and then get out. So now being able to know when to close it.
Sure.
And I know you would have just gone on that one too.
You saw that, yeah. You saw I was like,
You were fake listening.
I was like, but what would you have done there?
I would have sold.
Sold.
there.
Yep.
Uh-huh.
Why?
Because the buying candle, I guess it was going up. So I know that's going to trend. It's a normal candle. So when it starts flickering, that's when I would have.
Yep. And look at that. We would have just made money on that.
Yep.
Right? Like I was like,
I saw that.
I gotta stop. Right? You know what I mean?
I gotta know when
And
to
for
walk
me,
away.
that's why I trade for an hour or 1%, whichever
Yeah.
comes first. So my favorite day trading is when I hit 1% in 5 minutes, 10 minutes. I'm done.
When did they?
You know? But so I have to teach myself that I'm done.
Yeah, and
right?
it just shows you to the consistency and discipline, I guess.
Yeah.
Okay.
You know, I mean, where else can you go? What other vehicle, what other instrument can you do that's going to yield you 1% a day, right? But sometimes as traders, we're not satisfied with that. We want more, and I think that's the greed kicking out. And I could go for more, and if I was trading full time, I could probably do more, but I don't want it. I want to be fine with 1% growth on a day, and that's compounded. So if you do 1% a day over 20 days of trading, that's probably like 25, 30% because it's compounded on your original investment, right? So, and I got to look at that, what that would be, but still, where are you going to go to get that?
No, I mean, real estate takes too. That's why I'm here, because real estate takes too long to pay. You work, and I sold 2 homes in January, and I have to wait until they close until June. So it just doesn't.
So for me, it's like, when we did that on a $10,000 account. So, I mean, we basically made $75 in that hour, which isn't bad, $75 an hour.
But
That's
like
a good
even
paying
minimum.
job.
Yeah, it's like that's above minimum. I'm not even making that right now with my job.
You know
so,
what I mean? But
yeah.
but if you extrapolate that out to, say, a $50,000 account and you're making 1%, that's $500 an hour.
Yeah.
Right?
So you're doing $70,000 a day. That's about $80,000 a year. So that's not a bad salary to live on if you're just doing it an hour a day.
Right. So yeah, exactly. So that's kind of what I look at it.
Yep.
Instead of like some traders say I got to do 2 to 3% a day. Well, I often look at those people that say I do 2 to 3% a day and say, well, why? Either one, they're trading for 10 hours a day to get that, or 2, they're trading for 2 to 3% a day because they got to make up their losses. Right?
Got it. Okay. Yeah.
So, best rule that I can give you is never risk more in one day than you can't make up in 2.
Yeah. Yes, that's the same advice.
Do you hear a lot?
Yeah.
Well, I think we're going to wrap up because that guy is tired. He wants to go to bed.
Yeah, I was.
I've had him here too long.
I did the night
but we'll be back tomorrow.
Thank you.
And but yeah, any other questions before we wrap up?
No.
All right. Well, thank you again for helping us out, and I think we'll
Thank
close
you.
down right there, Tanner.
Yay.